cracking open the world of fintech banking.
SWOT analysis, the threat of fintechs.
She was the award winner as a top contributor.
There was a lot of moments. That might be the PG version.
You guys have a really cutting edge tech stack.
There were times that I really questioned my choices.
You don't get to serve your customer the way that you would really want to.
If I'm profitable in 12 months, something has not gone right.
Yes, I can't believe we've gotten this far in without saying the word AI.
But it is banking at the end of the day.
Compliance first. So what does that mean to you?
I should add that to the Howie test.
Your bank will be turned off immediately.
Onboarding fintechs is so much fun, right, Lindsay?
JP at Alloy Labs always coins the edge of money.
Same banking, different distribution channel.
Our CFO was actually the one that said cannonball.
Have there been any battle scars?
We got into this to grow deposits.
The BaaS space has had a bunch of super high profile implosions.
It's going to explode. The dinner test is important.
They said they've seen the most success and also the most failures.
And it's interesting to me how many times fintechs have never been asked that question.
Back to my early days.
The two questions I asked myself early on was,
welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
Welcome back to Inside the Vault, where we're cracking open the world of fintech banking to show you what's really happening behind the scenes. I'm Ted Huff, the founder and CEO of Voalyre, a fintech advisory firm, and today we have confidential informant Steve Bishop. And today's episode is about something most people think you need: billions and billions in assets to pull off. Yes, we're talking banking as a service, but our guest has spent 14 years inside of a community bank in Nebraska and helped build their banking as a service, or BaaS, platform from the ground up. No top 5 bank playbook to work off of. She is just a real operator figuring out how to do it the right way.
Joining us today from Omaha, Nebraska. She started her career with Wells Fargo, and then before joining Core Bank as a branch manager, worked her way up to Vice President of Deposit Services, Chief Deposit Officer, and then 2 years ago became the President of Partner Banking. She's been instrumental in building Core Bank's Banking as a Service and their brand Corex. She was the award winner from Alloy Labs as a top contributor. Joining us today is Lindsay Borgeson. Lindsay, welcome to the Vault.
thank you. Happy to be here.
Lindsay, when I think Omaha, I don't necessarily think fintechs, banking as a service. Not the biggest name, but you guys have built an amazing program. And you stayed out of the news, which in and of itself is a success. Tell us a little bit about Corex, Core Bank, and what makes you guys different.
I will say that I think Omaha, Nebraska has been coined the Silicon Prairie, so don't shortchange us. But you are right. We are not the biggest name in BaaS yet. We certainly aim to be a well-known, respected name, but for the right reasons. Really, I think what we're building is unique in that we came in at an ideal time. We came in when there was a lot of noise. It was at its loudest. And so we were really fortunate to be able to build it right from the jump. Best tech stack, best people, and really approaching it from what is our DNA as a community bank. We found a few folks from within that really understand how we deliver on relationships and customer experience. We've woven that in with how we approach partnerships. And then we are really focused on our ideal customer profile. We're doing deposits, money movement, and card issuance, and really passionate about fintechs that serve the business community. So sometimes we'll talk a little bit about vertical SaaS later. They're not as mature in terms of their compliance muscle, and we aim to help them do that and make sure that innovation continues to thrive to serve small business.
What was the first major point where you're like, okay, well, this isn't like any other business to business relationship that we've had in the past, and it's going to require a completely different model. Help us understand what that moment was and how it changed the way you thought about the overall bank's business.
I think the initial foray into banking as a service, you mentioned I was the chief deposit officer, and we had spent strategic planning talking about SWOT analysis, right? The threat of fintechs, the challenge of growing our deposit base. It was years of listening to folks that were in it and that we respect and that have done it well. Let's stop talking about the threat of fintechs. Let's stop talking about buying deposits. This is the deposit strategy. So we moved in, I think, with eyes wide open. I would to say, is this a completely different operating model? It's still banking, right? The same principles apply. It's risk management. It is customer experience delivery. It's caring about a business, the fintech, and their end users and seeing them succeed. Yes, there are different complexities and nuances. And there were definitely moments that I said, okay, this is different than what I've done. But it is banking at the end of the day. And I think there's a little bit too much mysticism maybe around what we're doing in Corex, even from the core bank side of the house.
I read that Core Bank tries to be a remarkable company that just happens to be a bank, and that aligns with like what you just said. And something that's fantastic about the space, right, is same banking, different distribution channel. As you were getting into this, did you guys decide to just go like all in? Was there any like oh crap moments?
There was a lot of oh crap moments. That might be the PG version of what came out of my mouth. Certainly along the way, there were speed bumps and things that challenged my initial assumptions. We knew that this would not be off the side of your desk. As much as I was passionate about what I was doing on the deposit side of things, we're going to have to walk away from that and build some dedicated folks that put their energy around it. We were really fortunate that we had a handful of people that were ready to dive headfirst and dedicate their time to this. All in, I guess, I would say we weren't going to run so fast at the promise of profitability, but we knew we were going to make that investment with people's full time. Overall, I think there were oh crap moments as it relates to probably tech stack for us was something, bubblegum and duct tape on existing tech stack, and you quickly find out, oh crap, that's not going to work. So there were several, but I think there's no regrets. I joked at times to say, oh, had I known the full scope of this build, would I have still done it? Yes, I would have. But in the moment, there were times that I really questioned my choices.
When we look at the failures that have happened in the market, majority of the time, they decided to use the bubblegum, duct tape, and a paperclip like MacGyver across the entire organization. It wasn't just in the one particular area maybe that you guys started in. They continued to do it until it all just came apart.
Yeah, I think along the way, you start to realize you're building a bank within a bank. I'm not sure I understood that scope early on, but it's everything from the people, the tech stack, your risk appetite, your regulatory frameworks. Just seeing the next thing pop up was a bit of an oh crap as well. We knew we had to build it right. I was concerned about maybe approaches where I coined BaaS in a box. I don't want someone to come to me and say, we can have you up and running in 3 months. If I'm profitable in 12 months, something has not gone right. We haven't built something correctly. So it was definitely an all-in approach for us.
When you built out Corex for embedded finance and other platforms, you guys didn't do it alone. And you did partnerships. I mean, you did it with Cobalt Labs to really bring in, yes, I can't believe we've gotten this far in without saying the word AI, but yes, the AI-driven compliance side of the house. And it really has helped for embedded payments, folks that you have as customers. I would love if you could take just a moment and help us understand what the decision-making process was like, why you decided to partner in specific areas.
It's iterative. So you start with some of the foundational partnerships. When we realized we had made a mistake, I guess, in terms of who we were going to leverage for technology partner, it stopped us dead in our tracks. You know, I had to go back to the board and say, all right, the timeline has pivoted because we want to do this and make sure we're building a strong reputation and deliver at the highest level. So, I mean, we went back and we talked to over 10 partners, both on the reg tech side, specifically transaction monitoring, as well as our ideal partner being someone who could bring a full basically sidecar core. So that process took us a really long time to dig in and make sure all the capabilities were there. We wanted a strategic partner as a community bank. That's super important to us, is someone that doesn't just have an awesome sales pitch up front, but we really get the idea that they're going to be in this with us and our success is equally important to one another. So we had an announcement that Increase Technologies became our side core. They're an API first full core that was purpose built for technology companies. And we knew with them we were getting that strategic partnership. They all know fintechs really well. They bring the technology that we could not build internally. I think it's really about knowing what your strengths are and don't try to be something you're not. On the transaction monitoring side, that was a heavy lift. We brought in a lot of folks to look at that, and we went with Voalyre. We knew that they were also aligned with where we were headed. And then ultimately, as we saw our volume ramp up, and we have two different compliance models, which I can speak to, Cobalt really showed up, and we knew it was going to be something that could complement one of our models very, very well. It helps for internal efficiency, but ultimately the client experience, because they should go hand in hand when you make those decisions.
You guys have a really cutting edge tech stack, which you don't really see in traditional banking. What is compliance first? And what does that mean to you, especially when you're onboarding fintechs?
Onboarding fintechs is so much fun, right, Lindsay?
Parts of it are, right? I think sometimes those first 30-minute conversations, you should leave energized. And a fintech should expect their partner to be excited about what they're building, or they're probably not the right partner. If I leave 30 minutes drained, probably
That's
not
not
the
good.
right fit.
That's not good at all. Yeah.
Compliance first, I thought about that. And if I have that verbiage out there somewhere, I should probably consider removing it, because it's compliance always, right? Like, of course, up front,
Right.
that's your initial conversation. I want to know your compliance muscle. I
Uh-huh.
want to know that that is a priority. I don't want anyone to understate the importance, but it's upfront having those conversations. Again, I mentioned two different models. We do a managed compliance where we will own that transaction monitoring. We will own the KYB, KYC components, and then allow you to do what you do best in terms of run fast and make really cool things for businesses. But we can also do the customized compliance where the fintech owns that. But again, I have to make sure right up front that you are compliance first, that you really understand those obligations. It's just important for all parties involved, and the partner should want that, because I want our fintechs to sleep well at night knowing that we're going to be here tomorrow. So it's just a non-negotiable, really.
So many financial institutions decided to either go all the way to the left or all the way to the right on that decision. What has that done for the way you approach new embedded finance partnerships that come to the bank?
I think it allows us to really look at opportunities that are going to complement Corex and Core Bank as a whole. I spend a lot of time in our treasury services area. I'm a glutton for punishment. I built that treasury services area too. I talked to business owners a lot that had operational issues. I'd go to them and say, do you want some RDC? Do you want some ACH? Like that. I'm not solving the small business owner's problem. So having this approach where we can do some managed compliance allows us to talk to these vertical SaaS platforms that are doing really cool things for small business. We can't build an operational platform for every segment that we serve, but these folks can. So not only can this model allow me to have those conversations that aren't about, do you have a BSA officer? Do you have this, right? We can bring that. We can support you. You can grow. And then ultimately, I may be future-proofing the core bank side, because if we can't support them and we're going to lose them, I can say, hey, but wait, I have this really cool partner on the Corex side, and you still get to work with core bank. This model really has allowed us to really think through our desired customer profile. And the goal always is to transform the franchise holistically, which can't be easy. But these type of partners can really draw parallels between the two areas of the bank.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
A lot of times when you're leveraging these large corporate ecosystem products, it becomes client vendor and you don't get to serve your customer the way that you would really want to.
And even talking to some of these platforms, it helps us serve our community bank customers better, right? I have a better understanding of the challenges that general contractors and property managers face every day because I see this platform that's built, right? I think as bankers, we go right to, we want to solve your problem. Looks like a cash flow problem. Let's do a loan, right? But cash flow problems, I mean, everything starts at, I went to my hairdresser this week. Shout out. She had a platform. It's like she has to start with getting to customers. She has to book the appointments. She has to send the reminders. And she has that in one platform, right? And it's not her bank. That's not where she's working. And she doesn't even realize what's embedded in there. And so for us, it's all about getting to be a part of that ecosystem and making sure that we're continuing to have a big impact on small businesses. Their needs are changing. And I know JP at Alloy Labs always coins the edge of money. And that's what this is. And that's what we want to be a part of.
What is the craziest fintech program that you said yes to?
Maybe we're kind of boring. I think that we really stick to our strategic plan and ideal customer profile. And as I always try to relate it to the bank too, ideally it's someone that we've worked with, someone in the segment. If you come to me with something that's like, we have never had a customer in this space and I don't understand the problem you're solving, we're not the best for you. I think the craziest moment was just when we got our first big at bat and we had our committee and said, before we issue terms, are we ready for this? It was an interesting conversation. Our CEO said, well, how long are we going to tiptoe to the edge of the high dive here? And I said, we're ready. This is what we've been building for. And I think our CFO was actually the one that said cannonball. So it was time.
What is that ideal customer profile that allows you to continue to grow that portion of the bank while still letting innovation happen and keeping the customers happy?
I'd echo the strategic alignment with industries and segments that we serve. We're focused on all facets of deposit type treasury services right now. It goes without saying that commercials matter, but it shouldn't be the only thing that matters. The dinner test is important. If you don't want to have dinner with these folks, don't get into a partnership. Because when things are good, it should be great. Things might not be good, a year or two from now. And those conversations are only compounded as far as
I think the regulators should add that to the Howey test, the dinner test.
Yeah, it's important. So I think it's just really about alignment in approach to your strategy, your deployment, your compliance. And I just need to know that you are here to solve a problem for businesses and the commitment to deliver on customer experience the same way that we would.
What vertical market or vertical SaaS that you have had the most success in and why?
We're heavy on the construction, real estate, property management, like all the folks that are involved in that. And the why is, again, we're heavy on that on the bank side. It leans in. But I will say we have folks in that serve unions, that serve aviation, private charter aviation, medical, hospitality. So we do have a wide breadth, but we do feel like we understand a lot of those industries. But I would very heavy on that kind of construction, GC, commercial real estate investment.
When the individual deposits or individual money movements are of a substantial size, that's when it really starts to fall into your wheelhouse.
Size, volume. We love the float. You have to know your why. We got into this to grow deposits. Those opportunities lead the
Right.
pack.
Have there been any battle scars? Like if you're talking to another community bank, like do not do that.
Well, the first thing we did, honestly, in getting into it was read every consent order, which is as fun as it sounds. And then you need to do.
Gosh.
Well, I shared that fun with our CRO, so we're fortunate that we have a great one in that role. But you do, and you make a gap analysis, and then you make sure that there is not a stone that you're going to pick up and find something. So that part is, I absolutely say to avoid battle scars, you need to do that. Don't underestimate the time it will take. Going back to the board wasn't fun to say, well, there's speed bumps. Luckily, we have a really supportive board that understood that there were tech stack issues, right? I echo, don't believe your legacy vendors that say, well, we can do this. Make sure they've done it. From a talent perspective, hopefully you have some folks internally because it's super helpful that they have that cultural foundation, but also recognize that you may not. The skills don't always easily transition from what they're used to doing in a traditional community bank versus the mindset it's going to take on a partner bank side.
Takes me back to my early days in product management. It was like, if you spend the time to define it well enough ahead of time, it typically comes out closer to what you were expecting than if you were just to get started without really diving into it. We've hinted towards it today a number of times. The BaaS space, I mean, it has had a bunch of super high profile implosions that have happened. I would almost put it on par with some of the stuff that happened in digital assets in 2022-ish. How have you at Core Bank used that learnings that you took that time to do to really shape the way you're operating? And how is that expressed differently to your fintech partners?
Well, I had a mentor tell me, which I credit a lot to, why we're in this. And he told me this whole model of having a platform that handles your compliance and sits between you and the client, don't do it. It's going to explode. He told me that before it happened. So we went in saying, no program managers or through the middleware that's going to do this for you. We knew that was not going to be an avenue that we went down. I one time had a banker tell me, well, it's really great what you're building. And clearly you're being afforded a lot of time, which felt like a bit of a gut punch. But I think it's a good thing that I can explain to our fintech partners. And it shows the patience of our board and leadership to say, we get it. We want the time to be spent here. It also prompted us to be very proactive and transparent with our regulators. Before we did anything in terms of building a tech stack or getting into any of the really detailed processes, we went to them and we sat down with both the FDIC and the state and said, this is a strategy. And a lot of time looking at, we want you to know, we built a strategic plan and went back to them and presented it. And then we've invited them back twice outside of just exams. We've had one exam during the build early on, just to make sure that we are out in front of it. So I think the regulatory relationships, so critical. We don't think that anybody else is responsible for what we are as a bank in terms of reconciliation, compliance oversight. That really changed the course of how we went to build this. And I think we echo that to our fintech clients of how seriously we took this and how we're in it for the long haul.
Having that relationship with the fintech, where they're like, we're thinking about launching this new product or we're looking about launching this new service. And then you being able to take and look at it and go, okay, well, that's going to change our regulatory perspective. Maybe it's a concentration limit item, or maybe it's something around a special use type thing. But that's been where they said they've seen the most success and also the most failures is that communication with them.
I want to work with fintechs that understand and are happy with the approach. We have strong requirements, both in due diligence and ongoing monitoring, but we also understand that we want to be really good partners in how we collect that, hence Cobalt. We built all of our requirements, heavy requirements into Cobalt. Well, we can ingest those documents and run them through the AI tool, which highlights what is in conflict with our expectations. So it makes it less painful on our fintechs, right? We try not to do a bunch of email attachments. We've thought about workflows. We will not compromise what's required, but we take in consideration that they're also a business that's trying to run fast.
Lightning round. Why should a fintech choose Core Bank as a sponsor bank?
Think of fintech that values strategic partnership, transparency, ongoing communication. I mean, frankly, if you're a fintech that wants to not see or hear from the bank, we're probably not it. We want to work with people that want to grow and get excited about what's to come, both in banking and fintech.
If you were to give a fintech looking to partner with a community or regional bank, what are the top 3 tips you would give them?
Know what's important to you before you go into the conversations. Sometimes I ask fintechs, what's important in a partnership? And it's interesting to me how many times fintechs have never been asked that question. So go into it knowing what's important. Speed and price are important. Don't compromise, though, for quality in that, right? We're never going to race to the bottom, and you should be probably concerned if someone is. And then just never understate the importance of compliance and risk management. Your bank will be turned off immediately.
And the flip side of that, the top 3 tips for a community bank that's looking to get into banking as a service.
Don't dabble. Make sure you go in eyes wide open. This is not easy. If it was, everybody would do it. It's a long game. It's not going to fix a balance sheet issue or something overnight for you. If you're profitable, I mentioned early on at issue, alignment from the top. There's going to be naysayers. There's going to be internal, what is this? So you've got to make sure it's a board directive and your executive leadership team is excited. Then that's evaluating, kind of bleeds into evaluating your overall cultural readiness to do this. It's not for the faint of heart, and it may not be for everyone, but I certainly think it's worthwhile. And it is a lifeline in many ways to community banks' future.
What are 3 reasons or red flags that make you want to walk away from a fintech partnership?
Draining 30 minutes. I've had fintechs that feel almost like they don't need to over-explain their business model, or, they're the ones bringing this big value to the table. And I agree they're bringing value, but the bank has to feel like you respect what we're going to bring to this partnership as well. So if that is an off vibe, you got to walk. Too much round and round on commercials, which is, again, a sign that they don't see the value. We are not compromising on those type of things. We'll walk. Or if I'm just super confused and I've never heard of this space, if I can't understand and I can't help you succeed, we need to walk as well and get to a quick no.
What is one thing about BaaS that the banking industry still doesn't understand?
That we do sometimes overcomplicate it, and we should make it easier. I think calling it BaaS is probably overcomplicating it too, right? We're all about embedded in partnerships, but I don't think my family understands what I do. So
it's funny you say that, because my wife, for the longest time, when somebody asked me what I did, she goes, I don't know, he could be in the CIA for all I know.
We took the family on a little getaway around Christmas. After breakfast, I walked by and my daughters were talking. They were doing a job interview. And I heard my 10-year-old ask, so do you have any experience with embedded finance?
You have your succession plan.
There we go.
There's always something on the horizon, right, that we don't fully understand impact. Right now, the trend or noise that we're listening to is the rush to charters and the Fed skinny master accounts. And what does that mean for our business model, and how may we have to pivot? Or is this just, once again, more noise that maybe won't have the impact we think? So I'd say, at least for us at Core Bank, that's something we haven't fully wrapped our arms around, and keep looking into what that impact may be.
So what I want you to do is I want you to look deep, deep, deep into the crystal ball and tell me, what do you see for Core Bank, Corex, and BaaS over the next 12, 24, maybe even 36 months? And what's the biggest milestone you think we'll have?
You're closer to it. Can you tell me what's in there? I think in the next 12, 24 months for Core Bank, we're expanding our team. So we are looking for more and more dedicated folks that will help us scale this to the next level. Maybe then, Steve and Ted, you'll tell me that we are the name that people talk about, not just somebody in Omaha, Nebraska. We are so at a point where we're talking about expanding product offerings, still in the SMB lane, but getting more into the embedded lending side of things so we can be a holistic partner for our fintechs that are focused and aligned in the space. I think there may be new considerations around what regulators are focused on. So we just need to be out ahead of that. We know that it was a lot on the recon and the transaction monitoring side, but there's more things that are going to come as the maturity grows. But we all need to just be prepared for that. We should be doing it already. So I look forward to the future. I think it's bright. I think that you just have to stay disciplined, and we intend to, and we're going to scale and stay in this. So
if the bank is making the news, it's probably not a good thing. And you guys have built a phenomenal program there. The bank CEO is listening. They're on the fence. Any closing thoughts or the takeaway that you would provide them?
The two questions I asked myself early on was, can we really do this? And secondarily is, where do the opportunities come from? How do we even start growing this? And the answer is, yes, you can. And the opportunities come. I think the aha for us was, before we were even really ready to launch, there was a lot of organic incoming opportunities. And then you grow a network, be willing to learn and admit what you don't know. It was surprising to me. If you think about local competition, there's a lot of secrecy, right, around what they're doing. But the banks in this space are extremely collaborative because we want everyone to do it correctly. So lean into that and learn from them, and then be willing to give back in terms of how you can help them learn. It can't emphasize how much that this is a build. So evaluate your appetite, have documented risk appetite, have conversations with your board, evaluate your talent. It's worthwhile. And I think it is really a great avenue for community banks to thrive.
Well, I'm going to flip it to the other side. So if I'm a fintech founder sitting on the other side, what piece of advice would you give us for why working with a community bank like Core versus going to one of the big 10 banks? What advice would you give them in making that evaluation?
Well, I've been here for 14 years, so I'm not going to pretend that I've been out talking to big banks and understanding that value proposition. From my seat, though, I would think it's sort of like any business. Do you want to work with a big bank or a community bank? I think a community bank tends to have their roots really into all of our competitive advantages relationship, which I agree with to an extent, but that's a whole nother podcast. But I do think that they deliver on those principles. Early on in opportunities, fintechs have access to our leadership. I don't think you're going to get that somewhere else. You have executive leaders that are sitting around looking at these partnerships. So the access, the high touch, the partnership, I believe, is going to be stronger delivered from a community bank than one of your big banks. But that's in any relationship, I think, when it comes to banking. Don't assume that our community banks don't have the tech stack, because we've taken a lot of time and been thoughtful about how we go about this.
Thank you so much for joining us today. It's been an absolute pleasure having you here. Thank you for pulling back the curtain on how to build BaaS, telling the Core and Corex story. It's just a phenomenal story. You guys are doing a fantastic job there. So if you're a fintech looking for a bank or a community bank that's on the fence, reach out to Lindsay, connect with her on LinkedIn. She is a wealth of knowledge and a great person just to know.
As a fintech looking at this, there's a story to tell. Be sure you're telling it. And if you want to find out more about what's going on in fintech in and outside of sponsor banking, be sure to head over to fintechconfidential.com and sign up to get notified when a new episode releases, when we launch a new newsletter, when we come out with the new information. Go ahead and head over there. You can find us at YouTube, Spotify, Apple Podcasts, or anywhere you listen, and go ahead and sign up. And as always, let's keep moving forward.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk.ai tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.